Welcome to the Light Proton channel. Today, we are going to build an insurance company from the ground up in Capitalism Lab using the Banking and Finance DLC. Some of you might remember that we previously explored banks in Capitalism Lab, but due to their complexity and unique challenges, we didn't cover insurance companies. Another key feature of this DLC. That's exactly what we will focus on today. Thank you for watching. Don't forget to subscribe to the Light Proton channel to stay updated on new content and share this video with anyone who might enjoy it. Insurance has a long and fascinating history. While early forms of risk sharing date back to ancient civilizations, modern insurance practices took shape in the 17th century. One of the most significant events in insurance history was the Great Fire of London in 1666, which destroyed thousands of buildings and highlighted the need for formal property insurance. This led to the establishment of the Insurance Office for Houses in 1681, one of the first organized fire insurance schemes. Life insurance, as we know today, began to take shape in 1762, which introduced the science and systematic risk assessment for insurances. This was a turning point, as it provided a mathematical basis for insurance policies. Governments also started developing public insurance programs to provide social security. Germany introduced one of the first national social insurance programs in the 1880s, covering health, accident, and old age pensions. This laid the foundation for modern welfare systems worldwide. Today, insurance is a massive global industry, generating over 6.7 trillion in direct premiums in 2022. It plays a crucial role in managing financial risks for individuals and businesses. To reduce exposure to large-scale claims, insurance companies often purchase reinsurance from specialized reinsurance firms. Reinsurers help spread the risk, ensuring that insurers can handle catastrophic events such as natural disasters. Insurance now covers a large range of risks, from personal policies like health, auto, and life insurance to corporate-backed programs. The fundamental principle remains risk pooling, where a large number of policyholders contribute to a common fund, allowing claims to be paid when needed. Additionally, insurance companies invest a portion of their premium income in financial markets. For life insurers, these investments are crucial in ensuring long-term solvency and generating returns. In this session, we will dive deep into the insurance industry, its history, business model, and strategies for successfully managing an insurance company. Indeed, the business model of an insurance company is complex, requiring careful management of key performance indicators, investment strategies, and financial planning to ensure earnings. In this session, we will follow a structured approach to building and managing an insurance company. Setting up an insurance company in Capitalism Lab involves two main steps. One, establishing the Insurance HQ. The Insurance HQ is the core of our insurance operations. It consolidates all insurance activities, allowing us to manage key business parameters, monitor performance indicators, and oversee the allocation of equity capital. The Insurance HQ is a mandatory component and serves as the central hub for our insurance company. 2. opening insurance front offices. Insurance front offices operate in the different cities of the scenario and are responsible for acquiring and managing customers. These front offices collect premiums from insurance contracts with private customers, serving as a revenue source for the company. Without insurance front offices, your company cannot generate income from insurance premiums, making them essential for business operations. To better understand how insurance companies are managed by us in the Banking and Finance DLC, I will go through a set of FAQs that will help explain how insurance works in Capitalism Lab and the Banking and Finance DLC. First, as a reminder, what is the role of a bank? Banks play a crucial role in today's economy by providing capital to individuals and businesses, enabling investments that might not be possible otherwise. Banks offer funding for these investments and expect the borrowed money to be repaid over time, usually with interest. This means banks generate income from the interest charged on loans. Second, what is the business model of a bank? The traditional business model of a bank involves lending money and earning interest income. Banks provide loans to customers and charge an interest rate on those loans, which serves as their revenue stream. However, in order to lend money, banks need access to capital. To obtain this capital, they attract customers to deposit money into bank accounts. In return, banks pay interest on these deposits. The difference between the interest earned from loans and the interest paid on deposits, known as the net interest margin, determines a bank's profitability. Managing a successful bank requires careful oversight of various financial metrics and performance indicators. If you're interested in learning more about Banking and Capitalism Lab, check out our video I've linked in the description. Third, how about insurances? What is their idea? The insurance business model is fundamentally different from that of banks. However, like banking, it involves numerous financial metrics and performance indicators that must be carefully managed for success. The core principle of insurance is risk pooling, spreading financial risk across a large group of individuals or businesses. Each individual, the policyholder, contributes a small amount, known as an insurance premium, into a collective pool. Insurance companies often use a subscription model, collecting premium payments periodically in exchange for a continuous insurance. When an insured individual experiences an unexpected event, such as property damage or illness, they receive financial compensation from the pool to cover their losses. This system helps individuals and businesses mitigate financial risks they would otherwise struggle to bear alone. What is a historic example for an insurance event? Consider the people of London in 1666. Many had invested their life savings or even taken out bank loans to purchase property such as houses. When the Great Fire of London occurred, thousands of buildings were destroyed, leaving homeowners with no way to recover their losses. Even worse, those who had borrowed money to buy the property were probably still required to repay their loans, despite their houses being completely lost. For many, this would have been financially devastating, as they had no means to rebuild or recover from this disaster. How would insurance have helped in this situation? A property fire insurance system would have pooled the risk among many homeowners. Each insured individual would have paid a small amount, an insurance premium, into a common fund. When a disaster like the Great Fire occurred, affected homeowners would receive payouts from the fund to compensate for their losses. This financial support, known as an insurance claim, would have helped them rebuild their homes and recover financially. At the time of the 1666 fire, such an insurance system were not yet widespread adopted in London. However, the disaster highlighted the urgent need for property insurance. In response, the Insurance Office for Houses was established in 1681, marking one of the first organized fire insurance companies. What those kind of insurances are part of Capitalism Lab DLC. In the Banking and Finance DLC, property, house insurance, and vehicle, car insurance are both included. These types of insurances are vital in modern societies because a major loss can significantly harm an individual's financial well-being. As such, they are popular choices for consumers who wish to pool their risk against catastrophic losses. Without house insurance, losing your home due to a fire or other disaster could leave you without shelter. Similarly, without car insurance, losing your car could prevent you from commuting to work, potentially costing you your primary source of income. These are essential risks, and pooling them through insurance makes sense. And why should an insurance do that? How do they earn money? Insurance companies earn money by managing the difference between premiums collected from policyholders and the claims they pay out. Therefore, the business model intends to earn more in premiums than is paid out in losses. If the premiums collected exceed the claims made, the company earns the difference as profit. This is also called underwriting profit, and we will see it on Capitalism Lab screens. To ensure this balance remains positive, insurance companies use complex statistical models to estimate the likelihood of various risks and events, ensuring that their pricing is aligned with these risks. This helps them minimize the chance of paying out more than they collect. In large events like the Great Fire in London, would an insurance go bankrupt? Yes, that's a possibility. Large-scale events such as natural disasters like hurricanes, earthquakes, floods, or wildfires pose a major risk to insurance companies because they result in a high volume of claims all at once, known as cluster risks. A real-world example is a hurricane, where insurers pay out enormous claims. To protect against such risks, insurance companies often purchase reinsurance, which is essentially insurance for insurers. Companies specialize in offering reinsurance. However, cluster risks and reinsurance are not part of the Capitalism Lab Banking and Finance DLC at this time. What is life insurance, and is it part of the Capitalism Lab DLC? Life insurance is distinct from other types of insurance. It primarily pools the risk of an individual's death, protecting their family members or dependents from financial hardship in the event of the policyholder's passing. For example, if a person is the main earner in a household, it's common to insure against the risk of their passing, ensuring that their family is financially supported if they are no longer around. When a person passes away before the end of the insurance term, a large sum of money is paid out to their beneficiaries. While life insurance does cover the risk of passing away, it is designed with safeguards to prevent exploitation. Unfortunately, there have been isolated cases where individuals have attempted to pretend their own vanishing to collect the benefits. However, life insurance policies are structured in a way that minimize such risks. Most policies include a payout, not only upon passing away, but also upon survival through the policy term. If the policyholder outlives the term, they receive a substantial payout, ensuring that there is a financial benefit whether they pass away or continue to live. This design encourages the policyholder to maintain good health and life, making life insurance less about a bet on life expectancy and more about long-term financial security. If life insurance always results in a payout, how can the insurance company make profit? While life insurance is guaranteed to pay out upon death or the end of the policy term, insurers generally expect that most policyholders will survive the policy term. Policies are often designed with long time frames, sometimes up to 30 years, between when premiums are paid and when a claim is eventually made. The premiums collected over the life of the policy are reserved as claims reserves, money set aside to cover future claims. Since this money is sleeping for years, insurance companies invest these reserves in various assets, generating returns. The key for the insurer is to ensure that the reserves will be enough to cover the claims when they arise. In a way, the business model of life insurance converges with that of banking, as both rely on managing large sums of money over time and investing it to earn a return. In the case of life insurance, companies can earn money by investing the premiums, reserves collected from policy holders. Does this mean an insurance company is essentially an investment company? While an insurance company's primary function is risk management, it also operates as a significant institutional investor. Insurance companies collect premiums from policyholders and set aside a portion as reserves to cover future claims. These reserves, often referred to as premium reserves or claims reserves, are strategically invested to generate returns. In some cases, insurers may adopt a competitive pricing strategy, even accepting underwriting losses to gain market share, with the expectation that investment income will compensate those losses. This approach can make insurance operations representing an investment business, where money is raised through premium collection and then invested into financial markets. This model is most effective in strong and growing economies where investment returns are high. What is key to being successful in the insurance business in Capitalism Lab? To be successful, it's crucial to sign as many insurance policies as possible while staying ahead of the competition. This is where having an attractive insurance offering becomes essential. In Capitalism Lab, insurance policy follow the same marketing mix concept used for conventional products such as a desktop computer. Price, place, promotion, and product. Product. The quality of the insurance product is defined by the service provided by our insurance staff. Improving service quality through training can enhance customer satisfaction. Price. The premiums we set for our insurance policies determine the price. Place. This refers to the customer traffic to our insurance front offices, similar to how retail stores operate. And promotion. Brand awareness plays a key role in attracting customers. Advertising can help improve this aspect. So, should we just reduce the premium price to undercut the competition? Yes and no. While lowering the premium price can make your insurance more attractive, it's important to ensure that the premiums collect are enough to cover the claims, creating a positive underwriting profit. If premiums don't exceed claims, we will lose money quickly. The key is to balance price, service quality, brand awareness, and customer traffic so that we can maintain competitiveness while still being profitable. What else can we do besides managing our insurance business? In addition to managing the insurance business, we can explore real estate as a long-term investment strategy. Real estate is typically considered a safe investment that offers steady returns. In the game, we can set up a subsidiary focused on building real estate, taking the company public via an IPO, and use the profits and capital raised to further strengthen our insurance business. The Capitalism Lab Banking and Finance DLC is one of a kind and brings simulation of banking and insurance business to a high level and depth. If we master the Banking and Finance DLC, in my personal opinion, I would say we have understood the business model of banks and insurances. Whether we are ready to take over the responsibility of a real-life bank or insurance, I leave the judgment to you. Now that we understand the fundamentals, let's jump into Capitalism Lab and the Banking and Finance DLC and see how we can successfully build and manage our own insurance company. Here we are in the main menu of the game. We are playing version 11.045. It's a release candidate version and soon will be promoted as the official stable release. We are playing with DLCs, of course, the Banking and Finance DLC and the Subsidiary DLC. We will play a new game, a custom game, and load a script I have prepared before our session, building an insurance company. We'll choose a corporate color, yellow, which is easy to spot on the map. The logo, our portrait, our corporation name is Light Proton Corporation, and our name is Light Proton. Let's start the game. And here we are in the game. First of all, before we start establishing our business, let's look into the game settings. We set the difficulty rating to 230%. So this is quite a challenge. In checking, for example, the DLC tab and Banking and Finance DLC settings via the script, most of the settings are set to very high. There's one exception. For the sake of showing the difference, the insurance claims are set to very low, so that we have earnings between insurance premiums and insurance claims. And now let's look onto the world map. On the world map, we see that this scenario comprises 4 cities. We have 3 large cities with a very high population, London, New York City, and Hong Kong, with more than 4 million inhabitants, which make them a large market for our insurance business. At the same time, also Frankfurt, with more than 1.3 million inhabitants. This is where we will set up our insurance headquarter. But before we do that, let's have a view on the competition we face. There are a lot of companies being part of this scenario. This is us, and let's check out how many are also interested in establishing insurance business. We can just simply navigate through the list and check it out. For example, this company, Arrow Corporation, with the CEO Zachary, with quite high expertise in marketing training. I will explain why this is important in a minute. It's one competitor of us. Here's a second one with Noah. Not so high expertise in marketing training, which makes it a little bit better for us. A third one, BJ. And a fourth one, Quinn, managing the company Sky Image, also with a high training expertise. This will be a challenging session, I guess. And the rest of the companies, I think, will be focusing on other businesses. Yeah, that's enough for now, right? We need, before we start, establish the business, to check our own expertise. And always, when we start a game, we will check whether we have knowledge points and invest them into those skills which we need to succeed in the competition. And for setting up and managing successfully an insurance business, the business expertise of marketing and training is very essential. Having a high skill rating in those two expertise areas is very beneficial to us. Why? Marketing for establishing a brand for our insurance business, and training to effectively and efficiently train, via the budget assigned, the staff in front office to improve the customer experience ahead of the competition. In this game, we have quite a lot of knowledge points, 100. This is the maximum we can set in the beginning via a script. Usually scenarios have around 6 or 16 or something like this. But for today, we really need all of those knowledge points, and we will assign them to exactly this, marketing and training, to be very effective and efficient with our budget here. Because we have 500 million on our bank account of our corporation. But we will see here in the overview that many of the other corporations have a lot more budget. They have 850, 800, 750, and I'm sure I will find one here with more than $1 billion. So cash is not a problem for them, more for us. And that's where, at least with expertise, we can catch up a little bit with intelligently manage our strategy and setting up our business. What does not matter, so when we look back, now marketing and training is 100 in skill rating. What does not matter in this scenario where we purely rely on real estate insurance companies is setting the brand strategy. This does not matter in this scenario. Usually we will set it at the beginning, probably to Range brand, which is my personal favorite, but the insurance company has its own brand, so this setting does not count, and we will simply leave it as it is. And having said that, we will now navigate to Frankfurt, and here in the suburb, set up our corporation headquarters. This is not mandatory, and we don't need this for setting up insurance business, but I like to play with it. It gives a little bit higher of visibility, and it's let us, at a later stage, maybe for the sake of role play, set a salary for our CEO for us. And now let's come to the step of setting up the insurance business. The first step is always to set up the insurance headquarters. Already the insurance headquarters is quite expensive. It needs a lot of capital and has a high monthly fee. Let's set it up here. Here we see the main performance indicators and also some of the settings we can do for our insurance business. Most importantly, in the beginning, it's a premium price level. And for life insurance, home insurance, and car insurance, which are the 3 insurance products which are available for our insurance business, we will set the insurance price level to 110. This increases the average premium we ask from our customers. Each one set to 110. Car insurance 110. The car insurance and home insurance work quite simple. Customers will sign insurances with us, pay a premium on a continuous basis, a subscription model, and whenever a damage to the car or to the home happens, there's a claims event, and the loss is paid out to the policy holder. The home and car insurances, there's of course market cap. Yeah, you cannot sell more car insurances than cars exist in all of the cities, and not more home insurances than homes exist in the cities. I will come later to where the limit is. I think in our session we will still grow until the end of the session. However, of course, we need to be aware that we will not sell forever those insurances. There is a market limit. And for life insurances, this is a little bit more complex. This is not only about a premium and claims, it's also about claims reserves. I explain this in a few minutes. And those claims reserves to be invested into something else to also generate income from investments, not only from premiums. We have no competition at the moment. We have an overview of financial statements and financial assets, fund transfer, and so on. We will leave it now as it is for the rest and will establish front office, because without front offices, there would not be any premium earned by us. Those front offices are needed to sell insurances. Those front offices follow the 4P model as said in the introduction. Price, promotion, product, place. Place is one of them. And place, the quality of the place of the front office is measured by the customer traffic, like a retail store. And therefore, it's essential and it's highly important to find a very good location for our front office. We have not very high degrees of freedom to be better than our competitors. And therefore, this is one of the aspects we really need to ensure. So in Frankfurt, we will focus on the CBD, where, for example, the stock exchange exists, or a bank and a TV station and so on, different kinds of buildings, and where probably a high customer traffic is ensured. We will set up an insurance front office, which also comes with quite a setup cost and a monthly fee. And I think this is a good place here. Customer traffic index 72, 48, 42, 57. I don't see any spot which is even better than that. So we will squeeze it in right here, I guess. Yes, we will do that. Here's our front office. And this front office lets us essentially manage two different parameters which can improve our product. One is training budget, which improves our staff skill level. It's always good to right from the start with the medium budget for training. So when the competitors start to establish their front office, we already have a little bit invested into our staff skill level. Together with the waiting time, which is determined by the number of front office and customers we have, the quality of service currently rated with 50. And the second point is the brand rating. Yeah, so we have the third P now. First P was place, customer traffic 75. Second is the product quality, is the service quality actually, set with a training budget. Third P is the insurance brand rating for promotion. The price, by the way, we have set in the beginning. So the fourth P was set in the HQ. We'll go into the marketing tab. We will not set up any advertising yet. It's very expensive, especially in those cities with a lot of high population. At the moment, we leave it with training budget. I think this is a start of an effective and cost-efficient way of improving the product, the insurance product. Rest we will leave like that, and we will move on to the other cities and simply do the same. In New York City, we will watch out. Here, I think this is a CBD, and try to find a good spot. Very important to already here in customer traffic have a competitive advantage. Here's a spot with 66. There's somewhere else something interesting. Not here. Okay, then let's take it. 66. We will establish the front office here in New York. We will put a little bit of training budget. We will set it up and move on to Hong Kong and do the same. In Hong Kong, the CBD is not here. It's here, where the stock exchange is. And again, we will try to find a good spot for our front office with high customer traffic. This one has 60. Around 30. Just to double check, what about here? No, this does not seem to be good. Let's take this spot, 60. Here it is, a little bit of training budget, and move on to the next city. London. CBD is here. And banking and finance, insurance office. 66. Again, 66. I think this is a good spot. Let's set it up here. And also here, a light training budget. Training budget and marketing budget is something we pay on a monthly basis, and especially in the beginning will create a lot of costs to stay competitive and ahead of our competition and to grow faster than our competition. The effectiveness of the training budget and the marketing budgets is determined by our skill rating. Therefore, we assigned all the knowledge points we had to marketing and to training to make it most effective and most efficient so that we can save a little bit of money. Without those high points and those expertise areas, we would need much more money to come to the same result. We will see this in a few minutes when we advance with the simulation. We have now set up front offices in all of the cities. And before starting now, we do something else. We said in the beginning, besides setting up an insurance business, we will do something else which is also interesting and somehow relates to our insurance businesses. We will also invest into real estate. Real estate is something which comes with steady, quite safe returns if you do it the right way. And later, when we invest all the money in competitive advantage, in training and marketing our brand and so on with our insurance, we can use the profits from real estate to fund our insurance business and get some nice return from the investment. Just before we do that, we have now spent almost 230 million of our initial funding, and most of it, we see it here in the financial, in the balance sheet, most of it, 82.861735 million dollars is in cash, resides in the insurance headquarters. And this is the cash which is needed to now fund training expense and later marketing expense to establish the brand. When this gets to zero, then we need to transfer more money into the insurance company to pay for the expense, as long as we don't have enough income from assets like stock and bond assets, our investment, or the premiums exceeding the claims. We will look into this more in detail later. But now let's also set up a subsidiary for the Light Proton Corporation. This is done in the financial actions in the information center. Set up a new subsidiary company. We'll choose another logo which somehow relates to a real estate business. I think this one is good. And our corporation name, our subsidiary, will be called as usual Dark Proton Corporation, and we will assign quite a lot of money because also real estate is expensive. 200 million is transferred to the new subsidiary. To make it operational, so that it actually works and can be operated upon, we need a CEO. We need to hire a CEO. For real estate, the CEO does not really need expertise. Actually, we will do most of the things by ourselves. So therefore, we will hire someone with lower expertise level because it's not needed, but we save in salary. The high profile candidates for a CEO position, they ask for a very high salary. We want to save a little bit upon cost, so we will take someone else. For example, like Avery, and hire her as Chief Executive Officer with a salary of $750K per year. Congratulations, your new subsidiary company has been set up. And now we will forbid our CEO to do anything, because we don't want to set up a business, retail stores, factories, something like this. We instead want that nothing happens except buying some real estate. Setting up some real estate assets. So everything is unselected. And there's one more setting, which I always like to do here. Dark Proton set dividend. I will set the dividend, not let the CEO decide and set the dividend. I will keep control of that. Having done that, we can do the same. And this time it will help us. And it's more helpful than for Light Proton Corporation. For Dark Proton Corporation, we will again set headquarters and set it here in the suburb, somewhere closer. Here, for example, we will add all the departments to have the highest transparency and potentially make use of all the departments and units. Here's the real estate department. We will need it in a minute. This is our headquarters. And now let's invest the remaining money which is more than 190 million, into real estate. Probably not everything at once, but already a large share of that. And I recommend, before setting up a building somewhere, to check the market. We have here in the cities view in the information tab, we have here two graphs which are very helpful to decide which buildings to set up and where to set it up. And we see that in the beginning, and I believe that this is in most of the cases the case, office space and supply and demand index is negative. Now it's almost minus 90 for London. Also in Frankfurt, here it's even minus 100, minus 75, minus 84 in Hong Kong. This means that there's a high demand for office space supply. Whenever this figure is negative, the demand is higher than supply, which is always a good investment opportunity. In this scenario, we also see the same on a lower level in 3 cities for the housing supply and demand index. As this index was higher, let's say more negative, we will start to set up commercial buildings. For commercial buildings, it is essential to set up a good rent, to have a good location, very close to the CBD in the cities, because this influences the rating and the value of the asset. And there's one important information. The CBD in each city is actually very close to the stock exchange. In this case, it's quite obvious, All where those kinds of buildings are, it's close to the stock exchange, this is a CBD. In other cities, sometimes it's a little bit more scattered. And then we always look for a stock exchange and set up our commercial building right next to the stock exchange. Commercial building, the largest one, demand is very high at the moment. So let's select a very large building and set it up right next to the stock exchange here. And we see distance to CBD, almost maximum rating, commuting convenience, almost maximum rating, rent attractiveness we will manage, and the overall rating of this building is quite good. And we will now do this the same in all cities. A commercial building costs us in this scale, costs us around 30 million per building. We will now go to New York City and do the same. Here's the stock exchange, and also find a good spot, probably here. Commercial building. Squeeze it in here. Good rating. Next city, Hong Kong. Here, right next to the river, commercial building. And last one is London. Also here, right there next to the stock exchange, we will set up another commercial building like that. Also good rating. And because we have such often good overall rating, we will increase the rent, the market rent. And we will not do this asset by asset manually. We will make use of the headquarter we established for, let's switch on building it again, for our Dark Proton headquarters. Here in the real estate department, we set auto manage commercial buildings and set the rent to 110%. And that's it for now. We will now run the simulation for the first month and see what happens. The January in the year 1990. Almost done. Let's slow down a little bit and stop it right when we get to 1st of February. There we are. Now the first month is done, and let's check the situation of our insurance business. In the insurance headquarters, we get a complete overview about our insurance business. We can set the training budget. We have an overview over the brand rating in the different cities. We can see the performance of our insurances. We will come to this later, and also the competition we face in all of the different cities. And we see that 3 of the competitors have already set up one front office in the other cities. We will find out where they are and react to the situation. And interestingly, and that's why one reason why I set the price level to 110, the competition simply did the same. They increased also to 110. No one putting in more aggressive price in the market to differentiate from ourselves. This might change later. Those quantities on average 51, so 1 point higher. Brand rating is 0 for everyone. This is normal. And our market share, therefore, is 100%. And this is what we will do throughout this session. We will check in each city for the competition situation, check our parameters, and by investing into training or marketing or doing something else, trying to react to it and always ensure that our market share is highest. So let's go to our front office in Frankfurt. Here into competition tab, service quality is already 52, a little bit ahead. Sky Image did not gain any points here so far, so we will leave it like that. What we can do is already lightly invest into our brand, especially in Frankfurt. It's not so difficult as this is a smaller city with 1 million, a little bit more than 1 million inhabitants. It's with less budget possible to reach higher share of the population, and therefore with already light investments into advertisement. And I always like to do it mixed. Yeah, we can already a little bit gain in brand awareness. Let's try with 50K, around 50K for each of the stations. And let's look further into New York City and check the situation here. In New York City, no competition. We'll simply leave everything like it is. Hong Kong. Hong Kong, we have 2 competitors. We have the highest service quality. Maybe because there are 2, we will increase the investment a little bit into training. And for marketing, we leave it like that for the moment and see what the strategy is next month. London, same. 51, we are the only competitor. We leave everything like it is. Back to Frankfurt. For our real estate company, everything should be fine. Yeah, the occupancy rate increases quickly as there was a very high demand. And we will simply move on with the next month. February. Let's wait until February closes. We see that from time to time. Here we are in March already. New buildings are established and things are happening from our competitors on the map. And we will do the same. We will always check, go to our front offices and check the situation. We gained 4 points in service quality. 54 is greater than 50. Very good. Marketing did not have an impact yet. Let's check later again. But we have 100% market share in this city. So we sign all of the insurances with potential customers. Sky Image does not have anything from the market. In New York City, what is the situation here? We are alone. So we keep it like it is. This will change for sure in the next month. In Hong Kong, we have 2 competitors. Okay, another one, Round Petal, is also going on service quality. We have already increased our training budget. We leave it like that. We are a little bit ahead. And let's also, to be on the safe side, start to invest a little bit into our brand. And a little bit, actually, this is an understatement. To gain traction in brand awareness in such of a big city with more than 4 million inhabitants, we need to invest a lot in advertisement. And this already, we have a high skill rating in marketing. So still, this is very, very expensive. We will see that. Yeah, we will invest per media station 150. So we start to establish brand awareness. And whenever someone moves and has a brand rating of 1 or 2 or something like this, we will even increase this. Yeah, I think this will take a long time still. With this immense budget of 450K per month, still it takes a long time to gain traction in Hong Kong. Let's move on to London. This is the last one. In London, we have also 1 competitor. We'll increase a little bit the training budget and do nothing more. Return back to Frankfurt. And that's it. Let's move on with the next month, March. More buildings showing up on the map. This is March. Almost there. Here we are, 1st of April. The first quarter of our gameplay is done. And we will again, all the time, check the competition in each city and ensure by reacting to what happens in the market to have the highest possible market share. This is 100% at the moment. Very good. And we see Sky Image tries to gain traction in the market. They increase their service quality and their brand rating. This means we need to react to it. We will now go with highest training budget to gain higher difference and being more ahead. And in brand rating, let's play it safe, though it's very expensive, and increase here and here 50K. We remember, as Frankfurt is a smaller city, 1/4 of the population of the other big cities, we don't need such often high marketing budget to raise and increase the brand rating. What is the competition here? So nothing happens here at the moment. Maybe let's increase a little bit the budget. That's all in Hong Kong. We do the same, always the same. Yes, the others also invest into training. So we will now go all in. Highest training budget possible. And marketing, we see still brand rating is 0 and Frankfurt is already 1. Though we have a lot more money here per month paid out. Let's go a little bit higher. Like this, probably not enough still. London. Here, our front office, competition is 55, brand is 0. We leave it like that. Arrow Corporation is currently not challenging us. In all cities, we have market share of 100%. This can also be easily checked in the insurance headquarter. When we look here, we have the complete overview over all cities on average and everywhere 100%. Yeah? We see that we, with our 4 front offices, are now present in all cities, and this is not the case for all of our competitors, but will change very soon. Let's now look into our insurances, how they perform. And we will start with the easy ones, home and car insurance. We have an average premium. We gather insurance premiums, yeah, already 77K gathered in the past 365 days, actually the past quarter, around about 90 days. And we have claims. And this needs to be paid from the premiums. So a lot of customers pay into the pool and we have a premium reserve, and some customers have a loss, yeah, with their home in this case, and claim money from the pool, and those claims are lower than the insurance premiums. And in this case, it's possible to make underwriting profit. As we invest a lot into our brand, into our staff, to be ahead with our insurance business, ahead of our competition, we have a lot of expenses at the moment. And those expenses added to everything we can gain in premiums, which is a very small amount here, obviously, and we have a lot of underwriting loss. And this will continue for a long time, probably longer than our gameplay session here, because we will always invest into our brand, invest into training so that we stay ahead of competition, especially when the business is increasing and the growth is high. However, the situation in the long term, very long term, ensures that with higher premiums and claims that we at least can make underwriting profit somewhere in the future. If we set the claims rate in the game settings too high, then this changes. And it can be the case that claims are higher than the premiums for a very long time. And this means that with home insurance and car insurance business, actually we do losses. And this is not so surprising. In our real world, from time to time, in insurances, this happens. They, to attract customers, set lower premiums than they actually have in claims. And why do they do that? Because they believe that via investing the premiums they receive, which is their floating money, by investing it in something else, they can even have a higher return than simply having a higher premium and earn it with underwriting profit. However, we will do it the conventional way for home insurance and car insurance with our setting. Insurance premiums are and should be always higher than the claims. So it's in the long run, when expenses go down, we can earn money. For the life insurance, it looks a little bit more complex. We have a price premium level of 110. We earn premiums from new policies. And of course, because it's a long-term subscription model over 30 years, we have premiums from existing policies after the first year. Currently 0, we are in the first year. This makes the total insurance premiums, and part of it is set to claims reserves. What does it mean, claims reserves? Most of the policy holders, the individuals signing the insurance, will survive the 30 years. And after the 30 years, they will claim back money. And this needs to be saved. And this is the claims reserves. However, there's a small amount, unfortunately, of those policyholders who vanish before that. Yeah, and they also generate claims. And this is what we see here under claims. We have operating expenses, very high amount, will grow a lot in the next months as we need to fight against competition. Therefore, it's actually not an underwriting profit, it's a high underwriting loss. Having explained that, let's move on a little bit. Let's simulate the month of April. What we see here on the bottom is actually not our insurance business. It's from our subsidiary, from Dark Proton, the real estate business. Yeah, and this seems to run quite well. Yeah, we are already having occupancy rates with our rent that we soon, in the next 1, 2, 3 months, yeah, will be profitable. And then we can think of investing also the remaining capital we still have on the bank account of the subsidiary. But let's take care of the insurance business first. Let's check the situation against competition. In Frankfurt, we now have 3 other front offices from 3 competitors, and everyone tries to catch up. We have 100% market share and they try to catch up. So what makes us ahead of competition? We have a very good store location with customer traffic 94. The place is very well selected. Just let me repeat it. It's very important to have a very good place. Yeah, this cannot be easily changed later. And we will see that around the CBDs, a lot of businesses will be opened. Retail stores, commercial buildings, residential buildings, media stations. Yeah, the space will be taken very, very soon. Some of the competitors might buy actually land plots. Yeah, so it's very important to set a good place in the beginning and then invest into service quality and brand. Service quality is highest now among us with highest training budget, and brand rating is good, but not too good. So let's invest a little bit more, probably 150 with this TV station, to gain more traction and improve our brand awareness in Frankfurt even higher. What is the situation in New York City? In New York City, we have the highest service quality, 0 brand rating, not investing into brand at the moment. Let's go all in for training budget and keep everything like it is. We need to be careful. It's not so easy in such big cities to get 1 point of brand awareness. It's very, very expensive. So probably we will start on our own to invest into it. Here we are challenged again. We are already investing into our brand and still we don't have a single brand rating point. Though we already invest a lot, it's a large city. Let's further increase our budget. Now go to London, the last city. Here the competition is not so tight. Well, let's take all insurance types. This is a better overview. And can simply leave it as it is for now. Okay, let's move on. First of June, let's check where we stand. Again, and this is done all the time. We will check competition. In Frankfurt, it gets quite tight. Service quality is highest, brand rating is highest. We leave it like that. Market share is 100%. Good. New York City. Service quality highest, brand 0. Probably we should start to invest into the brand because competition gets tighter. 100. We can easily increase after a while. Hong Kong. 70. Brand still 0. This means increase marketing budget until we have 1 brand rating at least. London. This was not so problematic. Yes, this is fine for now. Can also now go all in to stay ahead. For service quality, the maximum rating we can reach is 80. Yeah, it's a mix of staff skill level and waiting time. And after we reach 80 in service quality, we will reduce the training budget to just maintain it. Yeah, does not make sense to invest more. We also see that now we continue with running the game. We also see that now our subsidiary with real estate, yeah, seems to be already profitable. So why not invest a remaining budget into a building or an asset? We will check this in a minute. First of all, here, this looks good for now. You can reduce a little bit the marketing budget because we have high losses in this front office. Only this front office, 800K loss per month. New York City, 900K per month losses. Very expensive business in the beginning. Competition, yes, good. We will now start to establish our brand slowly, month by month, increase budgets until we have 1 brand rating, which we actually achieved now in Hong Kong. So we leave everything like it is. We already 75 service quality, and London. The competitor invested into the brand in London instead of training. So let's defend that. And also now invest into our brand awareness. And we will go with a very high amount now to respond to this situation. That's it. So now we have said that we have remaining funding in Dark Proton, our real estate subsidiary, to establish another real estate asset. We will check again in the information center in cities for the current supply and demand in office space and in housing. So in London, it's still negative in both, 56 even. That's also the case in Frankfurt, also the case in New York City, and also the case in Hong Kong. So let's go to New York City. It's minus 57. Let's establish another commercial building. New York City is here. We remember that the CBD is determined by the location of the stock exchange. And here, this is our already established building, yeah, which generates already some profits. Very close to the stock exchange, just next to it. Ideal position. Now we will establish for Dark Proton another commercial building, and this time we choose this one, a smaller one, slightly smaller one, and set it up here. Yeah, also this has high ratings. The market rent is automatically set by our HQ department, where we asked them to automatically set it to 110 rent index. We leave it like that and move on with the next month. July 1990. Still buildings are established by competitors. 1st of August. Let's go to Frankfurt and check the competition. Frankfurt is quite tight. Luckily, we early invest into our brand to stay ahead of competition because service quality will be mature quite soon. We leave it like that, 100% market share. What about New York City? Also here, we leave it like that. No brand rating point, means investing more. Hong Kong. This is where we have already 2 brand rating points and reached now the service quality of 80. And this is the maximum we can reach for now. Therefore, we will reduce the training budget to a value where we simply maintain the skill level. And the skill level is maintained with our, we need to remember, with our training expertise of 100 points, around 80K. Yeah, let's simply leave 80K. So we maintain the service quality of 80 and continue to invest into our brand like that, so that there are more points and we are ahead of competition. London, same here. 72, we need to defend the brand position. So increase budget, the rating, the reach of the media stations is not very well. So we need to buy even more advertisement. Very expensive back in Frankfurt. Good. What we can do now is, before we move on, we can quickly have a look into our insurance headquarters and check the financial situation in the income sheet and the balance sheet. We have now 1st of August, so more than half a year is already done. And we can see where we stand. And obviously, when we see the year to date, so our first year stats, yeah, with also our lifetime income and income statement, we see that the operating profit line has a loss of 24 million. So in the beginning, with this kind of strategy, to always try to be the best in all cities, best among all competitors, we will need, in such of a scenarios for cities, 30, maybe 40 million per year investment into advertisement, training, and all the other expense, so that we remain the top player with 100% market share. And especially comparing all the expense, 20, 30, 40 million, with what we earn, this is very, very small in the relation. Yeah, premium income is not even 1 million. Claims reserves is 300k. Investment income 0, because we did not do any investments for now. Some claims. So we have a gross profit, which is good, of more than 100k already. Yeah, so the insurance business is fine. Yeah, but the expenses are immense. Yeah, we pay a lot of money into gaining and retaining 100% market share. Here in the balance sheet, we get a better overview over how our value is distributed in assets. We still have cash, 58 million, yeah, but it gets less and less. We have no stock assets or bond assets. We have claims reserves, and this will later correspond to the stock assets, bond assets. We will make it equal, but not now. 300k is not enough. And the remaining is equity capital. Yeah, and you also see, if you add liabilities, claims reserves with equity capital, you will come to the total sum here in assets. And that's it for now. We will leave it and move on with the next month. This is August 1990, and now we are in September, and we will do the usual procedure. Service quality is 80, we reduce to 80, okay. Brand rating is ahead. For now, maybe we can reduce a little bit, right? Save some money, burn not so much money. New York City, competition, all insurance types, almost 80. Brand rating, this we retain it as it is. Hong Kong, already 80. Brand rating is 2. We leave it like it is. 100% market share. And London, 100% market share. Brand is now 1. And we are still investing into service quality. Back to Frankfurt next month, please. September. New businesses show up on the map while we progress in time. We are in October now, and let's check again. Let's quickly go through 1990, and after the first year, do some more stuff. 80. Brand rating still improving. With 8. New York City. 80. We can reduce our budget to simply retain it and not increase anymore. Brand is 0 still. I think we need to do more. We will invest a little bit more. Hong Kong. But now it starts to get really expensive. Brand rating is already 3. We have 80. We can reduce a little bit. We don't need to grow so fast in brand rating. And London. Competition situation now also gets more challenging. Brand rating 2, which is good. 1 ahead of Arrow Corporation and 80 in skill, so we can reduce to 80 here. Here we see how expensive it is. Almost 2 million losses each month. Okay, that's it. Let's move on. This is October. We see that our real estate subsidiary is making profits. Very good. So soon we will invest into another asset, I guess. Let's do that in a minute after checking here our rating. Brand is 9 now, 100%. I think we can reduce further. It's enough to maintain the brand rating. Let's always be aware that when we don't invest, if we set training to 0 or advertising budget to 0, then both figures will go down. Yeah, we will lose brand awareness as people forget our brand if we don't show it to them all the time, and we will lose skill level in workforce, which is normal. Yeah, after time, you are not up to date anymore. There's fluctuation in your staff, so the skill level will be reduced if we do not continuously invest into both of this. New York City, our front office, 80, also one competitor already with 80. Price levels all the same. Let's invest more into our brand. This is the only thing we can still influence, yeah, to defend our position. Here we are brand rating 4 already. I think it's good to reduce a little bit. 4 is good, way ahead. And London. Let's not invest more than is needed. Yeah, we only want 100% market share. 80, brand rated 2. Yeah, good. We leave it like that. Budget also like that. Frankfurt, back in Frankfurt. We have still money on the account from Dark Proton Corporation. Dark Proton is our subsidiary investing into real estate. And we can check whether there's another opportunity to also invest the 50 million and not leave it just residing in our bank account with no value. Well, we still have quite low office supply in, for example, Hong Kong and London. Why not go to, I think in New York City, we established the second one right here. Yeah. Now we go to London and also establish another commercial building. They are very easy to be managed. This one has already 72 occupancy rate. Yes. Dark Proton, commercial building. Now we take this. And just next to the, why not here? Next to the, is this the stock exchange? This is the stock exchange. Just next to it. Here. Very high rating. We leave it like that. Go back to Frankfurt. And let's continue with the simulation. November 1990. Here we are in December, last month of the year. Checking our figures. Even 9 now. We leave it like it is. And we see now that saving expense means that we get closer to the zero profit line. Yeah, to the break-even point. It's still a long way. But at least we already now, we are here. 100% market share means that none of the competitors have any insurances sold and all the customers are with us. Brand rating is now 1, which is good. We leave it like that. And the rest like this. Hong Kong. Brand rating is 4. Probably is enough when we invest like that. And London. Of course, we can play a different style, right? We can, for example, try to have a high market share in one city or allow a little bit higher market share, more than 0% for our competitors. This is upon our choice of the strategy. Yeah. For today, we do maximum. Yeah. We try to really defend the position against all means, which is very expensive. But with another playstyle, this can also be done. Also, for example, and you see, yeah, setting up insurance business takes a long time until it really pays out. So also, we can, if we play the game, we can set up another business like retail, factories, and things like that. Our current scenario settings, the script file does not permit it. Yeah, there's no option to set up retail, manufacturing, mines, and so on. But if we would like to do it, we can do it. It will generate profit, and those profits can be invested into the insurance company, which has high expense. Yeah, 30, 40 million per year in the beginning. And then this way it's not so cumbersome and it's not so risky actually, like we do it, because we burn a lot of money at the moment. We leave this like it is. In London, back in Frankfurt, and let's close the year. December, almost done. 1st of January. First year is gone. So let's go now first through all the front offices. This looks good. Nothing to be done here. Also fine. This is good. This is good. Okay, all done here. We will go now into the balance sheet of our insurance headquarters and check for the claims reserves. Claims reserves is almost 1.5 million. And this is also our budget for investments. Yeah, we will not only try to earn money and income with premiums which exceed the claims, but also we will invest the money from others, from our policy holders. The claims we reserve, because after 30 years they will ask for a claim when they survive the end of the insurance term. Yeah, we will invest that. We will not invest the cash in our company. Yeah, we will only invest the claims reserves, though this would be possible, because the cash we desperately need to make up for all the expenses for advertisement and for a little bit like training. By the way, training can also be set here, yeah, for all insurances front offices at once. And also here is a very nice overview over the brand rating. And again, to remind ourselves, also here in competition tab, there's a good overview over the situation we have. Yeah, everyone established a front office in each city now. We have the same price level. We are best in service quality, brand rating, and market share. No one else is gaining any insurances due to our strong position in the market. Okay, we have our budget for investments is 1.5 million. Ridiculous low. But we will start to invest it to see how it works. Yeah, we don't want to wait another 2-3 hours, yeah, in the game to do that. We will now start it. Claims reserved can be invested like we can invest in any other asset. Yeah, we can invest into the stock exchange or in the bond market. I deactivated the global stock exchange. So there's no option here at this position of the screen to invest into the global stock market. The global stock market comprises well-known brands from our real life. And we can also use this stock market to invest more money and to also gain profits. For the sake of simplicity, I simply left it with the local stock exchange, where we have all the competitors who are not private. And we have the bond market, and this bond market is both, those US Treasury notes are available and any other corporate bonds if there are any, or there are no corporate bonds at the moment. So for bonds, this needs to be explained, and I believe it's good to understand very well the performance indicators here, and also what we see here in the parameters on inflation, unemployment rates, the economic state, the central bank attitude, the policies, and so on. Yeah, I think this is very good, yeah, to understand how to make profits with bonds. To not invest the time and the knowledge now and to understand it, we will simply leave it to invest into stock exchange. Our insurance is like a company of its own. It has a separate entrance with this symbol, Light Proton, and is also called Light Proton Insurance Company. And this is with the cash and the claimed reserves we can actually invest into the stock market. And we set us a limit of 1.5 million, and now we will look for as a company where the stock price hopefully will increase in the future. And this is a little bit now gambling. I'm not the best one in Capitalism Lab to invest into the stock market, but I gained a little bit of experience already. So there are a few companies who are usually insurance focused or bank focused, which are quite interesting, expensive, but interesting to be invested in the beginning because they have some steady growth, probably constant. Concept Bridge, Sky Image could be an option, and this is for insurance and bank companies. Yeah, so there's sometimes you see a steady growth. I think we will go with Concept Bridge. Another option is to go into the consumer-oriented corporations and check them for their current situation in revenue and profits. Yeah, in the second window we can check it. For example, here, Eternal Motion, retail focused, seems to now soon make profits. This could also be an interesting option. Why not choose this one? The price for the stock is a little bit lower, and we expect that we have the break even just reached now. This should improve the stock price, hopefully. Therefore, we will do a light investment, not more than 1.5 million of 0.2 percentage points. From Light Proton Insurance Company into Eternal Motion. Buy the stock. We have it here. And let's see how investment goes. We will see this in the overview in the headquarters. That's it for now. We have still 20 million left over for Dark Proton. We could do a investment into a small real estate. We will leave it for now. Yeah, we will leave it for now. Let's continue. January 1991. Here we are in February. We check again in all of the cities. Brand 10. This is good. Now we are on a constant level here. The reason is we have expense and very low income at the moment. Yeah, it takes a long time until this increases significantly. Also here, this looks good. This one is now 90. 80 is enough. $80 is enough. New York. Brand is 1. We leave everything like that. Brand is 4. Let's reduce further a bit. Yeah, it can take more time to get the 5th point. Now in London, brand rating 4. I think we can also reduce here a little bit so that we lower our losses. That's it. One more, please. February, almost done. Here we are. This looks good. This is fine. This is fine. This is fine. March, please. One more month. Here we are. And let's check 2 things. First of all, in Frankfurt, we check in our insurance headquarters where we stand. Yeah. Cash, we started with 82 million on the first day of our scenario, now down to 27 million. What is the reason? Simple. We have very high expense. In lifetime, $56 million due to the high expense in advertisement and to brand rating. So we defend our market position, 100% market share. And also in the year to date, we are already with 12 million. Somehow we managed to reduce training budget a little bit due to we are already at the maximum, just need to retain it. And we see that our premium income increases. Yeah, so we make more money from premiums. We need to deduct claims reserves. And unfortunately, our investment seems to be not so well running. Yeah, we have made some losses. So probably should try something else. We have now claims reserves 3.2 million. And we have only invested, now with the losses, 1.2 million. So let's look for an opportunity to up to 2 million to invest it into the stock market. And now we should choose something else, right? Those are very small amounts now. Yeah, so this will not change our life, no matter if we do gains or losses. But we want to understand how it works, right? So here for Eternal Motion, we cannot click here. We need to go and find it here. Eternal Motion. It went down a lot, though there are now profits, making profits. Probably this will recover. Let's go back and let's try financial focused companies. For example, Arrow, Concept Bridge. Yeah, we already said that this could be interesting for us. Let's invest in this one. It's a very expensive stock. Let's do 0.1%. There it is. And move on. Buy the dip. I see as a chat message here. Yes, a little bit risky. I don't have a lot of experience with the stock exchange actually, yeah, and I don't know how exactly the simulation works. Yeah, I try to look for companies who are making profits, believing in that the stock price will increase, and also into those who are media, real estate, and finance oriented companies. Usually they have a steady, good performance if we choose the right one. This was my strategy so far. Let's check our market position. We have very good, not market position, our market position for insurance. Light Proton. New York City is good. Hong Kong is good. London is good. Brand rating is a little bit too high. Yeah, we can probably reduce our market budget further. Let's check if it's possible without losing brand rating. It's 5 now in Hong Kong. In London, 6. Also here we pay a lot of money, right? Let's reduce. This is not needed. Save a little bit of our money. This is May. June. Next month. Again, we check and check. Is this realistic to have 100% market share for such a long time? I don't know. But with managing so closely those parameters, it's possible in this scenario in Capitalism Lab. Brand rating is high. High enough. Good. Good. Especially in the beginning when there was no insurance in the at all. Yeah, it's good to have a very high market share so that all the new customers are signing insurances and policies with ourselves. However, after a time, I don't know how long it takes actually, but after a time, the market gets saturated because, of course, you cannot sell more home insurances than there are homes. You cannot sell more car insurances than there are cars. And there are very specific formulas, which are also documented in the Capitalism Lab documentation on the official website. What are the market limits? Yeah, when get it saturated? And those formulas, we can simply go through it. Yeah, they are all related to the population and also to the real wage rate in one case. For the home insurance market, the market size is population divided by 3 persons per household multiplied by the assumption how many of the households will actually buy a home insurance. And this is 80%, fixed 80%. So population divided by 3, so this is 1 point something, and multiplied by 80%. So 1 million insurances probably. Home insurance can be sold. For the car insurance, it's population with multiplied by 40 cars per 100 inhabitants. Yeah, so 40% of the population has a car and will buy an insurance from us. And usually everyone in a mature society and economy will buy a car insurance multiplied by the real wage rate. Yeah, there's a corrective factor for real wage rate because if real wage rate divided by 100, by the way, because if an economy is mature, yeah, and has a high living standard, more people have a car, and if an economy is still growing, yeah, and still developing, usually in such economies, less people have a car. We can also, for the sake of interest and because it's fun, yeah, again, check if we want to invest more of the claims reserves. We have 2.6, 4.7, so 2 million we can invest now. So this will grow now, the claims reserve. So we are accelerating growth, and this means more money can be invested into assets. We will also always go for stock assets, and we will try to generate income from our investments. At the moment, it's not very distributed. Investment income is now at least positive. Great, from 2 stocks, not a lot, but let's do it. Yeah. This was a good decision to go with Concept Bridge. It seems no, it's not a good decision. We now have a loss again. Let's check for the others. Why not Arrow Corporation? They had an lowest price a few months back, and now they are improving. Let's go there. Let's invest 1.5 million or 0.10 and move on. Our CEO of our subsidiaries asking for salary increase. We'll simply accept that. Soon the money on our subsidiary, not to be mistaken, what we see here on the bottom is our subsidiary, the earnings from real estate. Our own, our insurance company is doing big losses, which we see obviously, but we want to keep an eye on our real estate company. This makes good progress. We have now 30 million on the bank account with all the profits. Yeah, 40 million done. Therefore, we will soon check whether we can invest into another asset or whether we pay this to our mother company, parent company, to our main corporation so that we can invest it in our insurance business. We will see. First, check the market position. So in this scenario, actually, we are managed it quite well. Yeah, we could maintain our position so that we keep the unbelievable high market share of 100% in all cities. Usually this is not the case. Sometimes a competitor comes very aggressively into the market and also sets a lower price level, and then it's even more difficult to retain the market share, and soon, yeah, they gain 20-30% of market share, and this actually makes a difference in our business. That's it for now. We wanted to check whether there's another investment opportunity for a real estate company. Let's go into the cities information center. Yeah, this is not really the case, right? We are negative in office space and supply still in all cities, but only slightly. Let's wait a little bit. We will keep the money and move on with July. This is July. We see that the simulation, by the way, I'm not sure if you have noticed, is getting slower. Yeah, the game calculating all the stuff in the background gets slower and slower. The reason is that we see the map gets quite full of assets. Why are our all of the corporations in this simulation setting up so many businesses in a short time? The reason is they had a lot of money in the beginning. We made it very easy for them to set up new businesses, even if they do losses, because they had 800 million or even 1.4 billion dollars on their bank account. So a lot of money they can invest into things, which actually is good. Yeah, so things get a little bit more dynamic. I think here in New York City, we lost 1 point in brand rating. Is this true? I don't know. Let's play it safe. 5. Hopefully this is enough to retain. 8. In London, this is also too much. Let's save money. And this is our headquarter. Okay, good. This one we keep. Oh, let's buy more stocks. Balance sheet, we have now claims reserve, so this is growing fast now. More than 6 million. 2 million we can still invest. The cash we will leave untouched because we need it to cover all of the losses, and soon there will be a window coming up, a warning that our cash in the insurance company is gone and we need to inject more funding, and we will do that, but this will come probably in next 1, 2, 3 months, not sure. 2 million can be invested. Let's go to the stock market. All in red figures here. Not the best investments. What about media? This does not look good. Here we see profits with Lightworks. Let's try this one. And next, we need to try many different stocks types. You have to have a portfolio which is a little bit distributed, and therefore, hopefully, in total, we will make more gains than losses with our investments. We are now on 1st of September. Checking our market position. New York City is now 4. This is 5. We simply leave it. This is 8. 8 is enough. We can further reduce our budget to save money. That's it. Next month, please. September 1991. And the simulation gets slower. We see that, right? how it takes more time to calculate each day of the year. Yeah, more businesses showing up all over the maps of the cities. Red is 14 now. It's 4. We lost 1 point. Am I mistaken all the time? I don't know. Probably we gained 1 point. 5, 8. That's it. 1 more month. At the end of the year, we do a short review of our insurance business. For now, we will simply continue like we do. Oh. Lunar Vitality has invented a camcorder. Is it worth to invest into this company as they have a new invention? Let's check. Lunar Vitality. What is our budget? 6 is 3 million. The stock exchange. Lunar Vitality. Well, actually, the stock performance is not too bad. How are they doing? They are having 1 R&D. Not sure if we should do that. No real business, yeah. Are they tech-oriented? No, consumer-oriented. What about the real estate companies? Escalate. Escalate looks good, right? Let's invest in 3 million into Escalate. 3.4 million. Yeah, this is good. Seems that the assets have a good high value. 4 and 18, more than 20 buildings. Yeah, this is a good investment for us. And five is enough, right? We reduce the budget a little bit. No competitors investing so much more. It seems like the competitors, they are waiting for us to go bankrupt. Yeah, this is the only explanation. Yeah, 0 market share in all cities. We dominate the insurance market quite easily. And they are simply waiting that we run out of cash, but we will not run out of cash. We will try to survive that with our strategy. November, please. And here we are. Your insurance company's capital ratio is negative. This is a more complex wording for actually having no cash anymore in the insurance company. Yeah, we from 82 million in the beginning, everything is gone in brand, in training, in the shop location, land, the buildings, the monthly cost for maintaining the buildings, and so on. So money is gone. Our profits are not enough to come up for the expense. So we need to inject more money into the insurance company. And this is quite easy. We take cash from our corporation. There was 60 million still left. We take almost everything. 58, for example, and inject this into our insurance company, and now they have cash and can do this and can leave it, can survive, can go on. This is November. Now we are in December. Let's quickly check the market position and close the year. Good. 4. Let's try to get 5. 8. It's good. That's it. 1 more month, please. End of December approaching. Yeah, 2nd of January 1992. We have now played 2 years. And let's do a short review of our insurance business. From the beginning, we have now insurance premiums incomes of, in the past 365 days, of almost 24 million. So our business is ramping up. This is very good. It's even still growing with 7%. You have a price premium level of 110. You have a good market position, and our total profit, which actually total loss, was almost minus 50 million in the first year. Now in the second year, it's a little bit better, as we could save some money through micromanaging the parameters. for life insurances. Yeah, and this is always an interesting ratio, yeah, or let's say difference. We have in total insurance premiums more than 30 million. We have claims reserves and claims, which is below that of 30 million. So without operational expenses, at least this would make a profitable business. And this is hopefully also the same for home insurances. Yes, this is true. And also for car insurances. The claims are less than premiums. So in the very long run, this is sustainable business. Yeah, but for now, investing so much in advertisement, it's not sustainable actually. We have 100% market share now for 2 years. We see how very, very slowly here the line gets closer to the zero line. So probably in a few years, we make insurance profits. The insurance revenue is increasing, which is very good. And now let's look into the income statement. We have very good now premium income of more than 2 million. Yeah, it's growing and growing. Claims reserves need to be deducted, of course. Claims need to be deducted, of course. These are 2.3 million. So we have left 400K in profit and additional 142K we get from investment income. So in gross profit of 500. We have huge numbers we play around with. So this is a very small number actually, but we see that it's growing. So yeah, let's see over time. Yeah, and then we have a lot of expenses. Yeah, a lot of investments for our market position, and those expenses are so high that we have a loss. Yeah, but those losses hopefully will decrease slowly, step by step. What we have seen is that for the lifetime of the company, 2 years now, we have already invested more than 80 million, just gone the money. We have claims reserves of 12 million. We have stock assets of 9.5 million. So 2 million at least can be invested into another stock. Let's do that. Let's go to the stock market and check what we can do. This is a little bit too nervous. What about the media companies? They are not very good at the moment. I think for media companies, it takes a while until they can really make money. For financial, Concept Bridge, Arrow Corporation, both are improving the stock price. Good. Infinite Play. Infinite Play could be interesting. Let's buy 0.1%. Infinite Play is a bank-focused company. And we see that they are also improving their situation. They get also closer to the zero line. So probably this is an interesting investment now. And we will continue. Before we continue, we will do something. We will check whether the 40 million now on the Dark Proton bank account can be invested in any real estate asset. So we'll check here in the city's information center about housing and office space supply in London. Yeah, it's almost positive everywhere. Yeah, this does not make sense. We leave the money here. What can we do with the money of the subsidiary? We can pay it out to our main corporation. There's a very easy way to do that via, with the banking and finance DLC, by the way, via financial actions, selecting the subsidiary and paying out a special dividend. Yeah, we can pay out a special dividend. Yeah, until we have zero cash. And this special dividend, as we own the company by 100%, is completely transferred to our parent company and therefore available as cash. So whenever the parent company needs money, we can get it from our subsidiary. Another option which we can do in a later stage, which probably generates even more money, is to go public, to do the IPO. Initial public offering. Here we can set up an IPO. We will not do it now. Yeah, maybe later. We can generate shares and release them to the public, for example, 20%. Then we earned funding of, in this case, 90 million. And those 90 million will be booked upon the subsidiary bank account and can be paid, for example, used for further investments or paid as dividend to the shareholders, which will be 80% our corporation and 20% our public shareholders do the IPO. We will do nothing of that now. We will continue. January.
A lot of things happening in the background. It's not so fast anymore. We are in February. We check our market position. Let's stay with 5. Reduce a little bit the market budget. Save costs, right? Everywhere 100%, I think. Yep. And for the real estate company, we do nothing. No, we will simply move on. February. We still see that the profits, yeah, still improve from our subsidiary. We see that here at the bottom of our screen, yeah, the occupancy rate is still improving, increasing. We can probably even increase the rent. We can increase the rent to earn more money. Let's do that. Increase the rent by 2 percentage points. Okay, good. Let's see whether this works. And go over here. What's now 6? No need to stay with 6, right? 5. 8. That's it. One more month. Let's do the first quarter of 1992 and then do something else too. March. And observe here how it gets crowded in Frankfurt. More businesses set up by competitors, not by us. And let's check. For banks, the waiting time increases faster. For insurances, it seems to not to increase so much. It's now customer waiting time 6. If it's too high, yeah, we should establish a second office, yeah, to avoid that waiting time gets longer and longer, and then the quality of service decreases, and we have a competitive disadvantage. Setting up a new front office is quite expensive. We need to buy the land, we need to buy the building, maintenance costs, and so on. But but at the same time, we want to defend the market share. So soon, somewhere in the future, this will be the consequence. Okay, this is good. And we said we want to check for our balance sheet. We have 19 million of claims reserves. We have 10 million of stock assets. So we can invest 9 million in the stock market. We have light investment income from our portfolio. Let's try to make more. Sky Image. Beta Nexus, no. This one looks not too bad. Sky Image, no. This is bank focused. Try Unison. What about our media corporations? Is iWatch? Will iWatch make it? Let's do. We said we can invest 9 million, right? We will not invest 9 million. We will do a light investment of 2. So we have 7 left. Also have media companies in our investment. Lightworks did not really work out, right? Not yet. It's the worst performing stock in our portfolio. Okay. Real estate. What about real estate? Escalate, also not good. Resonic. We can also go with, let's say, 3 million in Resonic. Like this. Let's check how much do we have left. Balance sheet. 15, around 3.5. What about another consumer company? This one skyrockets. Okay, good. That's it. Let's continue. April. There we are. 1st of May, 2nd of May. Again, check the market. Yeah, all good. All of this is good. And we have now 50 million in our real estate company. Let's check where we are in the supply, housing and office supply. Yeah, it's positive now, higher supply than demand. So we will do nothing for now. Simply continue. May, please. Here we are in June. All of this is good. 24, 18, so we can invest 6 million into stock access. Why? Why are we investing the difference? Let us repeat again, once again, to remind ourselves, we have cash in our insurance company, which is 40 million at the moment. We don't want to invest the cash of the insurance company into stocks. Yeah, we need it to cover for any expenses. Yeah, investing into advertising, training. At the moment, we are still not profitable. Though our revenue increases, we don't make profits. But for claims reserves, which does not count as equity capital, by the way, so half of our assets we have in total, yeah, around 60. Half of it, 35, is equity capital, and the other 25 million is claims reserves. And this is what we invest. Yeah, this is money from our customers, and the money from our customers we invest in something to have higher returns, not only from premium income, but minus the claims, but also for investments. Does it work? Not really. Loss for now, year to date. Also last year we had losses, but we will try again. Let's find something, let's expand our portfolio and try to, in the end, have profits from our stock investments. So balance sheet, we have 6 million we can do that. Go to the stock exchange. This one had a correction. Are not profitable at the moment. This one looks not too bad. 3 million, please. Eternal Motion, we have already commitment here. Eternal Motion, we have loss here at the moment. But now it's increasing slowly, so I think we should buy more. Buy. Okay, good. And if we check again the balance sheet, we now see that stock assets is almost 25 and claims reserves is 24.5. So it's always equal. Okay, good. Nothing to be done here. Let's move on. Salary increase from our CEO. Okay. I think it's fair. Yeah, she's not doing anything actually in practice because we unselected all the options our CEO has at the same time. The company is running well. Yeah, July 6, 5, 8, 1 more month. This is July 1992. We are now in the 3rd year of our game. There we are in August. Brand is still increasing. It's constant, seems to be constant. That's it. You have another 4 million. We can invest in the stock market. Let's check for something. This one is now increasing. We have not invested into Speedy. Let's buy this stock too. And move on. August. Businesses showing up. Momentum, a factory. Jewelry store. This makes me aware that I can just show you. I set up our own person, Light Proton, expertise, to have expertise in jewelry. So we could, in theory, establish a jewelry business because we have a high expertise here. What does it mean? High expertise in one product class means that R&D is much faster in this product class. However, I forbid to run any other business than banking, media firms, or commercial buildings and so on. So therefore, it doesn't matter, doesn't count, does not play any role here in this game. We have the 2nd of September. We check quickly our market position. It's very convenient everywhere. We will simply continue. September 1992. Simulation speed is a little bit slower now, as a lot of things need to be calculated in the background. And here we are in October. Let's check again our branches. All good. I think we can leave it like that at the moment. 35, 28. Another 5 million for sure. Let's check. Investment income now more than 1 million. Another 5 million. So our portfolio is now getting better. We have probably some high performers. Escalate. Speedy, which is our high performer, the Aero Corporation. Yeah, but it's not clear whether it will really increase. Trio Unison. $4 million investment into this company. And one more month, please. We need to be aware when we buy larger amounts of shares from the stock market that this increases the price of the stock. And of course, afterwards, it could fall down again, as this was too high share at once bought in the stock market. All of this is good. Let's move on with November and December for now, and then decide what to do next. We have investment income, we have premium income, we have reduced costs, and we are almost getting really close to the zero line now. I'm curious whether we manage to get profitable with our insurance business. Our revenue is still increasing. We are now in December. And we are now 1st of January 1993, 3 years done. What is our position in our operational position in our insurance business? 100% in Frankfurt. Not 100% in New York City. Aero Corporation took 2 percentage points from us. That's a surprise. How could this happen? We need to go with higher marketing budget and try to defend our position. It seems that due to probably high customer traffic, I don't know, the Aero Corporation could gain some market share. In all categories, in all insurance categories. Interesting, good. There's some competition happening. 100% in Hong Kong, 100% in London. So this we keep like this. And we can for sure invest now 9 million into stock assets. the stock market. Yeah, we need to be creative. Where to put it? Try Unison. 10% performance is still increasing. Why not increasing our position here? We go with 6.8 million. Okay, good. And what about the cities and the housing supply and the office space supply? All positive for now. No opportunity for a real estate company. Not enough money to do anything else like setting up a media station or so. Then let's leave it like that and continue. We are still generating investment income. Very good. This is January. Are we losing market share? We are losing market share in New York City. Let's pause the game in February. What can we do about it? We lose market share to Arrow Corporation. Should we invest more into our brand? Yeah, let's try to get a higher brand rating and therefore defend our high market share. Or is there no other good option we can do? I don't know. We can at least try, right? Let's not make it too easy for them. Invest a little bit more monthly spending in advertisement. Nothing happens here, nothing here. Everything else is fine. Let's go on with February. Still losing market share. No turning point. They're increasing and increasing. Though their service quality is decreasing a little bit. Is there an issue with waiting time? Customer waiting time is 5. Yeah. This is the insurance headquarters. Let's do some research. It's happening in New York City. It's happening Arrow Corporation in New York City. How can we find their insurance front office? New York City. You can probably corporate details. Arrow Corporation, firms, insurance front offices, and New York City, go. Here we are. Zachary is the CEO. Training budget is 0. This explains why their staff level goes down. Customer waiting time is 0. This is better than us at the moment. Easy because they have no customers so far. And marketing, light investment into marketing. Yeah, I think we cannot do much about it. Yeah. We will simply need to observe. Let's continue. A lot of buildings here in this space. This is Speedy Avian. We have already investments in Speedy Avian. March is almost over. When March is gone, the first quarter of 1993 is done. And let's check again for our opportunities to invest our money of our insurance company. In Frankfurt, we have our headquarters. Here's our Light Proton Insurance Company headquarter, HQ. Profits are going up a little bit. We still have a good growth of insurance premiums income. A financial income statement, we have a little bit of losses for the year to date. We can invest around 20 million into stock market. So now this gets higher and higher. Yeah, why? Because the growth adds up to our premiums and the subscription model. So the growth of our premiums is accelerating, and therefore we get more and more money. What has a good performance? Try Unison. We have already a lot of money. Arrow Corporation. This is our competitor, yeah, and we don't want to invest too much into our competitors. Sky Image. No. Infinite Play. Concept. Resonic. Escalate. Escalate, we can buy more, yeah. Why not invest? Like, this looks good. 19 million in Escalate. Sonic. It's going down a little bit. Speedy. Avian. It's going up. This is probably a step for next time. 60 and 60, yeah, it's a step for next time. Okay, good. Continue, please. Soon we will run out of cash in our insurance company and we need to invest money. Let's observe it. We see here cash is going down. Why? Actually, it's going up. The moment it's going up, but since we are not profitable, this will soon... that's interesting. Is this from income? From investment income? No. Let's see. We are actually now making profits. So I need to revise my statement. If this is sustainable, we don't need to inject more cash. Let's see. It looked like that, but suddenly there the red bar is going up in the upper direction. Very good. Let's check our market position at the moment. 100% in Frankfurt. Arrow Corporation is really trying to get traction now. They gained a little bit of market share here. Hong Kong, London, everything 100%. And income statement. We have premium income 8 million. Claims reserve 5.5. Investment income, no, not at all. This is bad. Hopefully this recovers. Claims, we have now an underwriting loss actually. Operating expenses, and now, now it's done already. It's again going down. Was only a small effect on a day or so, but let's see. After May, we will also check again if we can invest into the stock market with the money we got from our premiums, from our claims reserves. Now we are 1st of June. Our cash is still increasing because we get premiums in. And most of what we get in goes to claims reserves, and our equity capital goes down and down and down. This seems not cash be the problem, but if equity capital goes to zero, I'm sure we are asked to inject money. And we can do that, actually. How can we do that? Our main corporation is has only a little bit more than 2 million in cash left, but Dark Proton, our real estate company, is making nice profits. So we can do an special dividend payment from our subsidiary into our main and parent corporation. Let's see first if we can invest the money in something else. No, or it's in real estate, there's no opportunity at the moment. Housing supply for Frankfurt is going down. It's a fastly growing city. Probably this will come to us, but all other cities have a good supply of housing and space supplies, office space. So let's do the following. Let's do Dark Proton, not capital injection from the parent company, but special dividend, paying something back. And we will pay a dividend of $1.01 per share. This makes up 20. I think we can do more. Let's do 1.5. 30 million. Pay now. And this transfers money from Dark Proton to Light Proton. There's now 30 million available, and this we can inject into our insurance company. This is good. 90%. We leave it like that. 7, I think we can reduce budget here a little bit. 8, yeah, like that. What can we do? Balance sheet. We can invest another 15 million of money which comes from our customers and are reserved for their payouts of their claims after the end of the insurance, the life insurance term. Meanwhile, we'll invest in the stock market. We have 10 million, at least 10 to 15 million we can invest. Let's do that. So far, let's look at this. This year, our investments were not so good. 10 million. Let's pick something which probably gives us Arrow Corporation. Yeah. Who else? Speedy. Speedy has a good performance, but I'm not sure if this will be good concept. Bridge. Yeah, this one, I think. This one, we will invest another higher amount into this. 8 million. Okay, good. Having said that, let's continue. Agree. Yeah, now the insurance company capital ratio, now it's a little bit more complex. This is the equity and not the cash anymore. Yeah, the cash consisting of premium paid by our customers, which we need to reserve partially for our future claims of our customers, so that we have no equity, so we need to transfer funds. We have foreseen that, and therefore we will invest. We have set a special dividend from our real estate company and will invest this special dividend into our insurance company, transfer it, and now everything should be fine. Let's check. We again have equity capital and 10 million available to be invested into stocks. Last year we had an investment income. This year looks not so good. 10 million to be invested so that we turn around. Not too much into one company. What about Infinite Play? It's a bank. Are we believing in that they will grow further? Infinite Play has a good performance so far for us, and we have a very, yeah. Let's invest 8.9 million. Good. Let's continue and observe what happens here. 100%. We're still losing slowly, but we are losing market share against Arrow Corporation in New York City. But not in any other city. What about City View, housing supply? Yeah, still takes a while until it makes sense, I think, to invest into Frankfurt, fastly growing, into residential. We are now in August. Let's observe. Yeah, this is not very well running. Arrow Corporation is gaining market share against us. All other cities are fine. And though we have countermeasures in place, let's check whether we can, where we stand with our investments. Now investment income is positive, very well. We could turn around. And this is where now insurance business gets very interesting. We have a huge premium income meanwhile. Not everything is needed for claims reserves or claims. And we now, with the claims reserve invested in the stock market, we have investment income. And all of this now is almost or very closely getting to what we invest into our company with all the expenses we have in salaries, overhead, but also training and advertisement. And therefore we are very close. Let's find a good investment. Of the other 10 million we have now in claims reserves open and can transfer into stock assets. The rest, 27 million, needs to be retained as equity capital. We go to stock exchange and find Brown Petal. What is this? Insurance focused. I don't trust it. Resonic. Magnet. I think this one is good. Magnet Corporation's retail focused, but actually they have a lot of real estate assets. We cannot buy from public shareholders. Good. We need to offer to buy from, I don't know, from whom. This will be expensive. I can show you. For example, Marcus Johnson. Yeah, so the stock price is a little bit below 10. We can offer for the market price, yeah, to buy, not so much, for 9 million offer. I reject your offer and demand $15. Yeah, this is much more than the actual price at the moment, and forget it. Yeah, I will not do it. What about this corporation? Luna Vitality. Performance. Escalate is going up again, but there are no public shareholders. We are the same. Final Motion, Light Proton. Also Light Proton, fully bought by everyone. No public shareholders. Whirlwind. This has a low performance. Gridworks. No, not working. Shining Star. This could be interesting. They are diversified and they are now getting profits. But does it really mean that it will increase in price? We don't know. This one looks good, but has no public shareholders anymore. This one too. What about Fusion? Not good enough. Aqua, no. Oh god, no. Lightworks is going up now. Everything which goes up has no public shareholders anymore. iWatch. This is risky. One building, no. There was another one. Gridworks. Whirlwind. We found one, right? Shining Star. This could be an option. We can invest 10 million. Let's do that. It's a little bit risky, but they get profitable now. Let's try it out. Okay, that's it. Continue. Here we lose a lot of market share. Nothing we can do at the moment. All performance indicators are good. We can lower the price. But we will not do that, as in the other cities we are good so far. We have now investment income went negative. But we are almost profitable now. We are in October. Balance sheet shows that we have another 10 million to be invested. Yeah, let's do that. Let's pause for a moment. Go to the stock exchange and see. I think for all the very well performing stocks, there are no public shareholders anymore. Here they are for Core Signal. Will this go up again? I don't know. We had made huge gains with this. We can invest into CoreSignal. Let's buy that. Okay, and move on. Let's see if we are able to sustainably reach profits with our insurance company before we close the session. We have now investment income. Now it's fluctuating a lot. Balance sheet looks like if another 10 million we can invest into the stock market. Is there an opportunity? CoreSignal did not go so well, actually. Trio Unison is increasing and increasing. We should put here. We could invest more money into this company. What is the performance for us? Also very well. Good. And continue. December. We are now almost done with our 4th year. Let's close it and check our situation. Here we are, 1st January 1994, 100% market share in Frankfurt. We are still growing. Not even 80% market share left in New York City, but still growing. We're losing against Arrow Corporation, 100% in Hong Kong, 100% in London. This is good. We now have in our income statement, in last year, we have made an operating loss of 26 million, but it's improving. And we see that in last month, we had an operating profit. So we are improving. Together, premium income with now investment income, which gains significant share of what we earn in our company, we are now able to actually make a profit. Let's see if this continues. We have in our balance sheet now 110 stock at 100. This is balanced, so we will keep it like that. And we will check whether we can buy real estate or if there's an opportunity. Not the case. No, this is not the case. We will leave it like it is and pay out what comes as special dividend. Yeah. What can we do about the situation in New York City, where we lose a little bit of market share from day to day? We can establish another front office, probably get higher customer traffic, reduce the waiting time. We can leave it and accept that there's some kind of drain. And I think we will do that and not risk our probably soon being profitable insurance company. Let's check. In our HQ, where do we stand? We are profitable. Very well. We looking in the income statement. Year to date, operating profit 5 million. We got it. Yeah, we managed to get profitable, though we had very huge investments. See, over a lifetime, more than 100 million was invested. Almost 140 million invested in lifetime of this insurance company. And now, after this huge investment, now we get slowly profitable. What is the reason for getting profitable? We could maintain a very strong market position. We have, where are we? Competition or insurance types, almost 100% market share. And this is since a very long time. So all the insurances which were sold on the market in all the 4 cities, most of them went to us due to high service quality and high brand rating. And this means that we get a lot of premiums now into let's financial income statements. We get per month now almost 50 million in premiums. Of course, we need to deduct claims reserves for life insurances, will mature and get to a payout after 30 years term, and for any claims from home insurances and car insurances. But adding to that, on top of that, our investment income, we now can also make up for all the expenses we have and earn an operating profit. The investment income comes from, looking in the balance sheet, comes from using the money from our customers, the claims reserves, which will be only relevant after 30 years contract term. We will use them meanwhile in the 30 years to invest into stock assets, and with intelligent, smart investments, try to earn income, further income. And this we can additionally do now for 10 up to 14 million. Yeah. Equity capital is 28. This will be left over, but 40 million can be invested. Let's check the stock exchange. This has a very good performance, but we have already a high stock value. What about Infinite Play? Also has a good performance, but still public shareholders. It's bank focused. Yeah, we will increase our share here. Like that. And let's see. Before we close the session, let's do 1 or 2 more months. Let's finish March. Simulation gets a little bit slower now as there's so many things to be calculated. There we are, 1st of April. And 100% market share here. 75% market share still in New York City, Hong Kong 100%, London 100%. And our insurance company, yeah, it's still profitable, I would say. Though the income is a little bit less in the last month than in the previous month. Probably due to investment income being a little bit lower than in the past month. Yeah, we are investing into stocks. They are volatile, highly volatile. So there's investment income sometimes higher, sometimes lower. It seems that we managed to get profitable. Let's see whether we have a better view here. Corporations. Income statement. Yeah, this is good. Graphs. Yeah, here we see. We see here that, well, this is also not very helpful. Let's check for firms. Insurance. Yeah, this is a little bit better. Yeah, it's just bigger. It's the same as we see. Yeah, let's keep it here. Yeah, we see in this income statement that we managed to get profitable. Yeah, over time. Still, we invested more than 100 million. What's our learning? Yeah, running an insurance business takes a while, and we need to be patient until we reach the point that we have enough insurances signed with our customers and that we get investment income from reinvesting what our customers give us, and we need to retain as claims reserved. But after around 3 years, we are able, 1990, 91, 92, 93 done. Yeah, we are able after 3 to 4 years to be profitable now due to a very strong position in the market. Large markets, by the way, big cities. And additionally, tightly managing, yeah, where we invest and how we retain the position in the market. Very good. And we also see here this very nicely, yeah, that we are now over the 0 line in total profit, our company. Good. Having said that, what are potential options for next steps? Next steps could be to take more out of our subsidiary. We have also not as now successful insurance business. We also set up a real estate company as subsidiary, now having 80 million on the bank account, which can be used for something else. In this scenario, as it's not permitted, there is no option besides commercial buildings or apartments. So this needs to be looked into the different markets and how they was demand and supply of office space and housing. The same as after a long time, now it's not the right time, right? Obviously, 80 million is not enough. There can be, for example, a media station set up. Also, if we want to transfer the money from the subsidiary to our main corporation, there are different options. An interesting option would be to go from private go public, and as financial action do an IPO, yeah, which by the way would result into an interesting, I think an interesting result, yeah. And to be raised more than 100 million. This will be on the account of the subsidiary and can be paid out via a special dividend, just as an example, or be invested into further business opportunities like a media company, if we believe that this makes sense, right? So this is what could be one next step. And the other next step for sure is maintaining the good position with our insurance company and further increasing our profits, which we see here in our insurance headquarters. Having said that, I think we learned now from the beginning to run an insurance office. We also learned a little bit around establishing a real estate company and how the insurance business works and how with insurance business we can actually make money. And since our stream and our session is now already more than 2 hours, we will close the session now. Thank you for watching, and feel free to follow me on my channels or share my channels to others or my videos to others on YouTube who might be interested and enjoy my videos. Having said that, have a great rest of the day. Soon weekend will start. Have a great weekend and enjoy your time. Bye bye. See you next time.